Let's bring in Ken Hicks, Academy Sports and Outdoors CEO. What a story, Ken. Welcome.
Thank you. Appreciate it.
You seeing any signs of consumer stress that match the kind of panicky bank headlines we've been getting the past week?
We know the consumer's stressed, and we are a value retailer, and so we are seeing the consumer gravitate a little bit more to value, but they're buying what they want, and as far as their discretionary income, they're putting more of it into things they want to do, which is what we sell, like sports and outdoor activities.
So where in particular, and this is something we heard from some of the grocers, the big box chains, they say they can see inflation shifting consumer preferences. Do you see that easing up at all? I mean, in other words, we know the price pressures have stopped being as bad as they were, but prices are still higher than they were. And now we see some signs of a slowing economy. We see some fraying in parts, for instance, of subprime auto, things like that. Ken, would you say that that's just a one-off, or would that make sense to you?
No, there definitely is pressure, but one of the things is how people deal with it. And for example, bicycles, that's a business where we have a good position in, but we want to maintain that opening price $100 bicycle and $59 bicycle for kids. So we work shorter on that opening price, and on some of the higher price, we may take a little bit more margin on so that we can continue to offer for that customer who's really challenged a good value, as opposed to, them, not being able to buy a bike at all because it's gone up $20.
Right. Maybe make it up on the fancy fly fishing equipment or something like that. So
a helmet or whatever.
Sure. You're a business yourself. Where's your money? What banks? What money market funds? I mean, do you sympathize with those people who got trapped in the banks out west, or do you think they're, not indicative of the rest of the economy?
No, I'm actually old enough. I went through this in Texas in the 80s when the oil industry, a similar situation with the banks. We're fortunate in that our money as a company is in the large banks. It's very secure, and we feel very, very safe. But that said, we have seen some of our vendors, we're getting calls from them as they move their money around and have to change their banking relationship with us. But you have to have sympathy for people. It was nothing that they did that put them in the position where their money's at risk and they have to change a banking relationship that they might have had for years.
I was just saying to the producers this week, I want to talk to someone who went through the Texas banking crises. I didn't know you were going to be that person, Ken, so thank you. I was just curious if we had any kind of regional sour grapes or anything over what happened, but it sounds like people understand the risks out there. And do you think those vendor relationships are just going to normalize here pretty quickly?
I think they will. I mean, there will be some collateral damage in some banks, but I don't think we'll see what happened in Texas. Back in the 80s, Texas had 3 of the 10 largest banks headquartered in Texas. By the end of the 80s, they didn't have any in the top 20.
Wow.
I don't think you're going to see that this time.
Well, I appreciate the dose of levity and seriousness. It's always the opposite of the one that I think. Ken, and congrats again in a very tough environment that may yet get tougher. You're putting up these results, and we thank you for your time today.
Well, thank you. We appreciate it.